Good morning. So we had a nice pickup in momentum last week. We talked about this pre-market a couple of times last week, and we looked at past times where momentum picked up and what followed. And so as we go into this week initially, again, it's the beginning of a new day. We don't know how things are going to end, but on Friday, we had a slowing in momentum. So momentum picks up in a couple of ways. Of course, prices can gap up, and that's an increase in momentum that creates a void. Or you can have bars moving up, multiple bars in a row, where each new bar starts where the other one left off. And even though these are the futures that are trading overnight, you could see, it was one bar ended, the next bar started, one bar ended, the next one started, ended, started, and so on. So you get what we call a fluid movement in prices. Now, sometimes they move up. This is quite a controlled one. Sometimes they can move up vertically, which creates a greater void. But obviously, compared to this, momentum picked up. So over here, you can see how momentum picked up. The same type of bars. These had tails on them because they're dealing with this mess over here to the left. Whereas these bars, the tails were smaller, primarily on the bottom, which communicates to us buying on the dip and pushing higher. And then we had, I guess, last Thursday where it closed on the high, and that resulted in a slowing momentum day. So how do you read that? Well, small candle body. When you have a widening candle body followed by a small candle body, momentum is slowing down. And when it's preceded by this kind of price action, it suggests maybe a little bit more of slowing momentum. So while we don't know what this candle is going to look like at the end of the day, I'm kind of hoping that it doesn't look like that, because if it does, it's going to be a pretty boring day. Nonetheless, we'll see. Buyers did step up on a dip, and they didn't get it very far, cleared the high and came right back in again. So we're just sitting here with a relatively quiet morning. At this point in time, you can see on the 15-minute, just this sideways kind of mess that's going on there. So starting off, as I said, quietly, and the S&Ps are nearing the all-time high. So they advanced, continued in advance. They're up at an obvious place of resistance that everybody's looking at. So there's going to be this hesitancy to continue to press the long side after prices have moved up from support to resistance. And now we see, do they go sideways a little bit? The concept that we call absorbing supply, which is bullish price action. Do they pull back within an uptrend, which would be normal? It's just a different type of corrective price action, less bullish than one that would just chop sideways. So we'll see what this week brings with the news-driven market that we have, as to what's going to affect these markets. But just technically, we can see that prices are coming up here. And I just think that just based on the way prices have been moving, there's been this fear to a certain extent of moving things sharply higher too fast, but maybe that happens. So I'd be surprised to see that it doesn't take out that high now that it's so close. We'll see. Nasdaq momentum slowed sooner, but it's been leading the way up, and it slowed in a big way on Friday and reversed. So where it had this intraday bit of a nasty sell-off and power down move where it just cleared the low, which is typical with this particular instrument, where it just clears the low and then things begin to stabilize where stops get taken out. It's kind of like, so you might refer to it as a flush, stops being hit, targeted, whatever. Just prices, and you can see here, just moved so far so fast. They move under the low, and just historically, That's what we call a greater than 100% retracement, where prices then are expected to stabilize. And that's exactly what happened. So now, this area, just moving that down a little bit, not going to make that much difference. Just putting it on the low of Friday, that area becomes a line in the sand. That if it, let's just say you can see the pivot high formed here and another pivot high. And we look at these pivot highs, which are simply just a bar with 3 lower highs to the left and right. Why 3? I picked 3. Just looking at a lot of stocks over the years, 4 was like overkill, and 2 at times was enough, but other times not too much. So 3 was a good in between. It works. And when you don't see any pivots like this, it just indicates strength because it doesn't pull back. So if it breaks here, we expect a pullback within an uptrend. However, if this turns into a red bar ignored, or what Dan calls sometimes a bear sandwich, he's just kind of a hungry guy, he puts names of animals and food and stuff on patterns, but it's interesting. And so what that is the meat in the middle is the bear or the bull, right? So if it was red on both sides with green in the middle, it would be a bull sandwich. So in this case, it would be a bear sandwich. And a bear sandwich within a move up is a type of continuation pattern or correction pattern. So if today was to form a green day closing on the high, our expectation is if it clears Thursday's high, it accelerates higher. And, we've had discussions about some type of an acceleration high. It could be a measured move, Robert, because, this is the start of the move. All of this over the course of, I guess, almost a month was a resting period where the correction started after this momentum move. So it doesn't, momentum moves can look a little different, but you can see the bars opening where they close, open where they close, open, so on and so forth. You get red bars. So you had this red bar ignored. And so we had this corrective period after this increase in momentum, created a pivot, made support, created support, retested it, little peekaboo under the low, come back up again, sloppy, increase in momentum. So this could be a continuation pattern if we were to get that bear sandwich, because this is the beginning of another new move. Now, granted, the move, we can go to the weekly chart, has been going on since the end of March with these resting periods where these weekly bars are overlapping each other. Those are those corrective price actions within the uptrend where, on the daily chart, it's just red, green, back and forth, continually back and forth. And then the momentum picked up again. So it would not be unusual to get a continuation pattern here. However, continuation patterns have the greatest probability of continuation at the beginning of a move. So at this point, it could be because of the resting period, but the further prices go up, and keep in mind the S&Ps are near resistance, the greater the probability of a whipsaw. But, that's trading. We never know 100% for sure, but we can look at probabilities to say, well, this isn't the beginning of a move, but it could be the continuation of an existing move that's been going on for a while. Right? So we'll see how that plays out. Let's look at SPX, which so far being a pretty quiet day here. Go back to our futures for a second. The call side could be a little uncertain. Maybe we don't want to go there. And I'm not so sure about the put side either at this point in time. But, we've got a little failure up there, which isn't very meaningful. Excuse me. I think I'd like to get below on the S&Ps below 3,300. Let's go to SPX here. Yes, those 3,300. That's 50 points away. I don't know. We're going to be so lucky to get premium there, but there's an unfilled gap. Going under Thursday's low, I think, is too close to the danger point. So Then we'll look and see if 3,300 has premium. McGraw's telling me 3,320 has premium, which is kind of like the trade-off, whereas as to what would be what we want being a no-brainer and a little bit into the danger zone. So there's a gap. There's nothing there. 3320. Well, let's see here. 3320. That's not bad. So on the hourly chart, we have this congestion. There's the gap. There's a gap here. There's a gap here. There's pivots here at 3380. So these pivots give traders reference points to say, hey, it's in an uptrend. If it pulls back, I'll be a buyer there. So as credit spread traders, and with SPX, they're going to expire at the end of the day, we look at what's the probability of not going below that area. So that's 3220. You said 3320? You said 3320. No, thank you. No, thank you. And it's like somebody saying, hey, idiot, you willing to give me some of your money? Now, if it pokes above here, there's going to be less premium, of course, but then it's going to look a little more secure. Well, that doesn't interest me, 3320. It's too close. So no, maybe 3280 on the upside, not without some kind of a breakout failure. So maybe not be so easy. Maybe, we might have to give it 15, 20 minutes of chopping around to get more information. The Dow bringing up the rear, of course, and it is also up near its resistance area and beginning to stall there, as prices historically do. When they move from a support area to a resistance area, they stall. Not a big deal. Well, maybe better to sell Wednesday, but let's see how things develop. When we start thinking about Wednesday, that gives us time to gather a little bit more information to make that decision. So we'll do that. So the same story here. Momentum is slowing. Maybe a quiet day. The Russell is bringing up the rear. And as I wrote in the letter, the wide range bar in the Russell and the transports may result in a resting day. It kind of makes sense. We're starting out with a resting day, and maybe that's what we're going to see. But this now has the room to go much further than the others do. Well, the Nasdaq could break to new all-time highs and take off. But anyway, this has room. Look, resting period for about 2 months, and now a wide range bar in the weekly chart. And so maybe a little bit of a rest, but plenty of room to go, which suggests this may be the one to press the accelerator a little bit. Maybe double up on positions, proper money management, of course. You better know what you're doing. But nice potential to move higher with these patterns in multiple time frames. And bonds. Slopping around at resistance. And looked at that, way down here as it started to advance. This would be where the heavy lifting was. And you see the red, green that's slopping around there and starting to roll over a little bit. But major support, pivot low down here. So there should be buyers on dips until that changes. All right. Crude oil. Right. What, this is typical for this market. We talked about this downside break when it was happening, violating prior reference points of support, suggesting it go lower, and it just stopped and reversed right back up again to take out the highs. So whipsawed there, and now a pullback. It's got a tail up there, but a pullback. So this is something that often confuses many looking at this kind of a pattern. So the way to make the best out of a pattern like this that suggests it's going to go higher is to wait for it to have a couple of days of stabilization. And what happens by doing that, your intraday charts build up a base, as you can see what it's doing here. So it tried to hold that level, it was unlikely to hold, being so close to the vertical drop. And then it drops again. And so now, as it's created this support, a rest of a day of chopping here could set up a move to move higher. So we'll see how that develops, whether it holds on to this green day that's developing here. Gold, I think we'd all agree it's a little extended. It's had a really nice move, maybe a little bit of a rest. We'll just have to see how that develops, but obviously a bull market. And don't bet against the uptrend in a bull market. Good morning, Germano. JR, I'll let Dan look at CTAS. Dave asked me to look at Bitcoin. And see that red bar ignored? That's not exactly a bear sandwich, because this isn't a complete body around it on this side, but that's a type of continuation pattern. And here it blasted off out of the base, creating that what we call a void, and it built up this support area. So kind of sloppy, but looks like it's going to go higher. You always look to the left, see where the next reference point is, and it's a little bit up here, 13,000. So there's Bitcoin, and there's also, I guess this is gapping up, 1370. Might want to keep an eye on this one as well. Lower priced, and so there's another thing to look at. And the transports, let Dan come on. Wide range bar, right? So increase in momentum. We looked at increases in momentum bar by bar, which this week's MT Live is about bar by bar analysis. And one bar, in this case, after multiple bars moving higher, momentum increase typically results in a slowing of momentum, which could just be a day of going sideways. It doesn't mean it's got to pull back. It's getting close to resistance, but not quite there yet. So I guess we walk into this day thinking it might be kind of a non-event unless we get some news or something to really get things moving. So we'll see. All yours, Dan.
Good morning, everyone. All right, all our opens are fine. CTOS. Hey. So yeah, CTOS, it was on our list the entire last week. I said if it got over this green bar, we were going to sell a put spread, but then it never triggered. And now it looks like a directional. Yeah, it's kind of lagging the market. But Friday it finally woke up. So yeah, keep that on your list, sure. MGM's in the news, said IAC's taking a stake in them, so this is ripping. Nothing to do with MGM. But we have WIN and LBS put spreads from Thursday, reversals on major support, and they're getting a little pop here courtesy of that news is what I'm guessing. So I'll be looking at tightening the stops on those. I don't know what's up with Apple today, but up 650. That's a pretty good percent rebound. Still no trade though. It's too extended for me, but that's helping the Nasdaq. Florida here. Okay, so this is a pro gap. This is we talked about gaps last week, and this is negating all of this trading range and the breakdown, and now it's gapping way the heck over here. It's still extended, but it's definitely worth watching. Let me put him here. All right, MGM I'm doing nothing with. Nicola I just sent to Telegram, sent to our subscribers saying I'm going to keep an eye on it. Had a tiny little retest there and then a gap up. So all week long, it's just in a narrow trading range. And now it is blasting right now. So this would be a no-brainer put spread. And we'll keep an eye on it as a directional and a pullback. I have it here in the bottom right. Omer, 21 bucks. Wow, that's a big old gap. You're gone. Space. Still in a free fall here. I'm surprised it's not up more on the news that the Pentagon, I guess, gave them a contract to, to fly some equipment up space over the next decade. But there is no turn right there that I'm interested in. All right, Jemiah. What a beautiful breakout down here, Jemiah. There's nothing to do with it now. It's gapping up again. UMC, no pattern, extended. Twitter is in the news. Now they say they might want to buy TikTok. I don't even know the price of that thing, and if Twitter can afford them. We'll see. Maybe a put spread, no volume, you're gone. ON have earnings, you're still in the trading range, no interest. WSC gapping up a little bit, but you're just a little churning uptrend. Oh, with Nikola going, let's look at his, right, whatever, you'll space is Virgin, I don't know, we'll come back to that. So Workhorse here, same sector, is actually going down. So I have no idea why. Maybe that's one of the things of something that's helping one company is hurting another. Estee Lauder, surprised there's no volume. It had a big story in Barron's, a big bullish story. NBEV, little liquid pot cannabis company, no pattern. TH, your dead animal. RCL had earnings. Really not much of a reaction. Down $1, but that's not much. PPL, 28 bucks. Okay, this one's worth watching. Big old bottoming pattern, reverse head and shoulders. Left shoulder head, right shoulder. That's worth watching. Marriott here had earnings. Yeah, it was down. Now it's up. Not much, but we noticed a lot of these junk sectors getting a bid last week. Airlines, cruise ships, not as much, but jets also. Yeah, a lot of these look very similar. I had a nice wide range bar pre-market already. Wow. So I still want to keep an eye on airlines, maybe some restaurants. Oh, I meant to look at DRI. Let's keep an eye on DRI for put spread. Restaurant stock. BKI, no volume. I can't tell where you're trading, but I don't like all those overlapping bars. I think that these are some earnings here. You're gone, no interest. RDUS, gapping up, no price void. No pattern, you're gone. Tignac, 1222, no pattern. PPL, that's what we just looked at. All right, TH, no interest. Oh, Rita is getting whacked. That must be a bio. That's an ugly whackage there. Khalid, is it extended? No, no, it's not extended. So as long as the market holds and you get a good intraday setup, it looks good. I think Sage is a therapeutic, but this looks like a core trade. Well, take that back. Not a core trade, but maybe a swing with a big target. But yeah, I'm pretty sure Sage is pharmaceuticals. Gap and C's had earnings, so that's in the leisure. That's SeaWorld. So see, still just trading range. The leisure has not been as strong as hotels or cruise ships, and I guess it makes sense from a kind of a fundamental perspective because you got business people going on airlines, but not necessarily on cruise ships or to SeaWorld. ON 21 bucks, no price void. Duke, nice wide range breakout. We'll come back to it. Fold. Yeah, I'm getting there. It's in my gap list. Hey, that's a beautiful consolidation right there. Gapping up to 15. Which is resistance, so it's not ideal, but this is a beautiful picture right here. 4 bars in the upper half of that. We'll come back to it. Messy trading range. PPL we already looked at. Go. Gapping up and failing. It's a mess. SPG 65. Yeah, let's keep an eye on SPG for put spread, definitely. Turan. Yeah, that and DRI. SPG is Simon Properties, the mall REITs. And they're in talks with Amazon. Look at poor Kodak, $9. Do you remember this day at $40, somewhere up here? Man, that's loud. I totally agreed with Kramer on CNBC that these guys should immediately rush out and do a secondary offering at 45 bucks. Look at this thing, straight up, straight down. I would be willing to bet anybody in here $1,000 that there's a lot of Robinhood traders still stuck in that stock. That's a piece of junk. MCRE, gap's too big. Alex, this is the one you said to watch. Yeah, that's worth watching. XLV, XAR, this is the military ETF, looks good. Lulu, 123 looks good. RXOP, we're already in a put spread, but it looks good as a directional too. COF, we're actually in a Condor. KRE, banks had a nice day. DFEN is also an ETF for defense. That looks good. Ben, 30-minute high.